The rand has been steadily strengthening over the last number of months, largely due to the US dollar itself broadly losing ground against major currencies due to concerns around the trajectory of the largest economy in the world. And this week, the rand rallied to a near three-year high against the US dollar. Analysts say the positive rand has been driven by a number of factors, including what's been seen as a stable political situation under the government of national unity and increased confidence around the country working to fix its structural challenges like energy and logistics, among other issues. And this confidence has come through in the country's capital market.
I think the key drivers for the rand strength has been our real rates, so our bond rates have been significantly higher than other global competitors. So that's been very supportive of capital inflows into South Africa. And in addition to that, we've had very strong commodity markets, specifically precious metals. And even though we are exporting less gold and platinum than we used to in the past, we are still seen as an export or commodity exporter. And as those commodities strengthened, that's had a hugely positive impact on the rand dollar.
A stronger rand-dollar exchange rate is positive for South Africa from an import perspective because the country imports a significant proportion of goods, with rand strength making imported products relatively cheaper. But for exporters, a stronger rand can be problematic in the short term, as that would serve to make their products relatively more expensive. But in the long run, a stronger rand exchange rate is said to be the preferred outcome.
If I simply think about the agricultural sector, a huge amount of their input costs lies in the use of diesel, fertilizer, etc. All those things are, and packaging costs, and all those things are closely linked to the exchange rate. And if that strengthens, it's got a positive impact on the price of diesel, a positive impact on packaging cost, shipping cost, etc. So also their input cost is a little bit lower. So it's not always just doom and gloom. And in the long run, a stronger rand is in the interest of South Africa because it's positive for our inflation rate. If it's positive for our inflation rate, it's positive for interest rates. And if it's positive for interest rates, it's positive for people with debt. And we have lots of those. And then their income becomes better, their balance sheets looks better, and their distributable income that they can go and spend in the markets and their wealth is being protected. So it's generally a better thing to have a strong exchange rate.
While analysts are positive about an improved growth outlook for the country this year, as well as the evident confidence coming through in the local markets, they warn that the geopolitical tensions simmering in many parts of the world could adversely affect emerging market economies like South Africa, exposing them to as yet unforeseeable shocks. Nompumelelo Siziba, SABC News, Johannesburg.